Hello guys, welcome to the Trading Parrot. Since Saturday we are talking about getting to 63k. I was a bit skeptical that we are going to cross that level just because there was not enough incentive to go beyond. Since we have managed to get to 64k and now we are kind of dumping back into 63k, we're going to talk about a bullish and bearish case that could unfold for the rest of the week. All of this based on the distribution of the liquidity, the ask and bid on the order book. We're going to make a hard stop here on the weekly time frame, do an analysis. We just have a candle close and we are forming some interesting signals in here that I want to talk about, and I want to make sure that you are aware. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yesterday I made a video about Kaspa versus NIR. I also included some analysis on Bitcoin and immediately got less than 300 likes. That means that you guys are not very interested in altcoins still. If you think that I'm wrong, go there and give a like to the video so we can get back into 300 likes per video, which will be really amazing. And don't forget to leave a comment down below if you want me to review any altcoin. Some of you guys want me to review ICP, so I might include it in a short video later today. Let's get into the content. Let's start with the CME gap that we just formed, because currently we are in the process of closing that gap. If you were watching my videos over the weekend, we mentioned that the price closed at 62.7 on Friday. That's when CME went offline and the market opened with prices over 64k, creating this gap in here. And at the moment we are in the process of heading towards the gap. On the 1 hour time frame is more evident that the precise price is 62.875. Just remember that there is a small difference in the prices of CME versus spot or even futures on Binance and other exchanges. On my video on Sunday, we were talking about this bullish flag that is here. We were speculating that we were going to only get to 63k, not just because there is a massive level of resistance, but also because above this area there wasn't much liquidity for an incentive to continue going higher. We also emphasized that small liquidity that was still there actually ends above 64k. We compare that liquidity against the liquidity below 60s and we say that it was substantially less. Ideally, what we want now is the price to test that 62.7, close that gap, and hopefully use the short-term holder realized price, which is also 62.7, as a level of support. That is supposed to be the role of this metric over bull markets. Although in this current bull market is not respecting it very well. I have mentioned that multiple times that I actually lost my hope that this metric can be used consistently over this remaining part of the bull market. We can see that we have also formed quite a big chunk of fair value gaps, and we can also see that our speculation on Saturday that we were going to get to the median, we managed to do that on Sunday, and from the end of Sunday to Monday we have another spike to the top end of the range. At some point we gave a kiss to the top. We say that I was doubting that we were gonna get there just because of the lack of incentive. Once again, you can see I was wrong on that, but hey, we made it to 63. That was our trade from the time we were testing this resistance on Friday when I came back to making videos. I remember at that time we were on this candle during which we actually gave a final kiss to 60, and that has done roughly a move over the weekend in total of 5%. I'm happy we managed to catch that move, and now to see if we could have an actual global breakout. For those of you who don't know what I'm talking about, that means breaking above all the resistance in here and getting into the 70s on the 4 hour. The price will have to go above 67 SI on the 4 hour. That means that the price needs to continue above 64k. That makes a lot of sense. At that point, we have this fair value gap attracting the price as well, and a massive order block in here, which is currently the resistance. So if we can overcome that 64k, we could be heading back into the 67, 68. If you manage to watch my early morning update on Telegram, I publish a 7-minute update, and I was saying that it's pretty cool that we managed to make it to the top of the range. And the reason that is getting me slightly more excited compared to how I was over the weekend is because I say above 63k, there is this whole chunk up until 67 that there is barely any liquidity. And if I see the price going beyond 63k, I will start immediately thinking, what is the incentive to go there? One, is it a liquidity hunt just to trap the longs and to dump on them sub 60s? Or we went that high because the price is planning to head to actually the 67 and take that big chunk there? We will have to see. At the moment, depending on how this reacts, is if it gets bought up right after the fair value gap, including the one here below, and we manage to overcome that 64, it's very likely that we are turning really bullish and coming back into that 67k. When looking at the liquidity, you can see that the incentive is sub 60s at the moment, and I really have to zoom in a lot to start seeing liquidity where we are. The price came here not really to take liquidity, it came here for a reason, and we're trying to figure what is that reason. Zooming out, you can tell that there is a big chunk left over that we couldn't take from before, and we need to keep in our radar. Is the price wanting to go there? Because there's almost nothing here. So why did we come here? Just to do a dead cat bounce or to do that final V recover into 67k? The answer to that is to keep the structure intact, bullish. We have already mentioned how high we need to go, 64. Our support was this, but it got broken. So we need to adjust that to the previous pivot, which was this one in here. Let's make it a little bit more accurate. There you go. And we are right now about to test that support, which is located roughly at RSI 56. Let's change that in here as well. And you can tell that is our current support. It will be amazing if, as I say, we just take this fair value gap, we kiss the 62.9. We also have the support at 62.7, the short-term holder realized price as well. If somewhere around this area we can hold and close above it, and then we can kick that 64k and close somewhere above that as well, then that 67 becomes a lot higher probability. Worth mentioning that the bull flag that we were talking about on Sunday in here, placed on the breakout area, takes us roughly to 64.7, not necessarily to 67. On the daily time frame, we need to observe what's going on with the price because we are seeing a rejection from the point of control. Remember, point of control is the area most traded in terms of volume. Being above it towards the top of the range is bullish. Being below it, we are back into the bearish area. We are allowed during today to go back below it and do our stuff, take the liquidity that is necessary, bounce, close above it, and we are in bullish territory. Worth mention, also RSI band in here is currently supporting the price and is heading back up. Potentially is going to meet the price somewhere in the middle. You can see that is represented by an RSI of 42 at the moment, which this time we put a higher low and we didn't even touch. There has been a breakout on the daily that happened on mid-September. We lost that level in here. We couldn't hold above the yellow line. That was all caused by the geopolitical conflicts, but we have managed now to go back above the yellow. That is mildly promising. It will really be great if we can get above that point of control and not see a rejection somewhere there. And I continue to be very happy to see that there is so far no distribution from big whales. We are at 0.59, which is really awesome. I want to show you the full range of the bull market. You can see accumulation on bear market being a lot more aggressive. In the summer 2023, there was a lot of accumulation in here. After the all-time high, we have significant accumulation. There was almost no accumulation for the past 6 months. And right now we are re-entering that area that is in common with the accumulation we have in 2023. You can see that it took quite a lot of time, but I would love to see in here this to continue to stay in this range, oscillate somewhere in here, as opposed supposed to see a big spike of big whales doing deposits. That together with the long-term holders holding and slightly buying during these days is very bullish actually. On the megaphone pattern, I think we couldn't have asked for something better than this at this point in time in the market. We closed the 3 white soldiers on the weekly time frame. We managed to get above the bull market support band, and instead of breaking below it miserably like we did the last time with a huge red candle, we closed one with wicking below it and then managing to close slightly above it, which is great. We are opening the week with a green candle, quite small, but we are early in the week still to see what comes after. Even though the structure looks bullish on the weekly, I have to tell you a bunch of things that are looking scary and the price needs to do something soon. Starting with what's happening with the stochastic RSI on the weekly. We have had this move to the upside and we managed to close right here on Sunday with the mouth open and pointing upwards. So up until Sunday, everything perfect, but in this new candle that has been open just for a few hours starting today, you can see that the mouth is closed. So if by next Sunday, the price doesn't move higher than where we are, which is 63K almost by the dollar, we need to get to 64, 65 very quickly and close there on next Sunday. Otherwise, we're gonna get a bearish cross on the stochastic RSI weekly time frame. Looking at the RSI weekly, it doesn't look that bad. Actually, the candle in progress of this particular week is just going sideways, whereas the one we closed on Sunday put a higher low, and quite a higher low compared to this. This is roughly 8 points higher, which I really appreciate after having had 3 candles pointing up, 1 pointing down with very insignificant move to the downside is actually bullish. So between these 2 indicators, there's at the moment a little bit of friction. One is saying we're about to do a bearish cross, the other one is in a healthy breakout, confirming a higher low and potentially ready to continue going higher. In terms of fair value gaps, today is not an easy reading. Sometimes it's very quickly obvious what comes after, but at the moment we have a big chunk right above the price that ends above 64K. That will be an incredible incentive if there wasn't anything below it. But at the moment below, there's quite a big chunk of fair value gaps. In terms of number of them, very small ones, but all together creating some sort of cloud of incentive to also go up until 61.5K. Below that, we have a big vacuum that resumes from 59K up until 58 point something. And with the price roughly at 63K, if we were to go 3K lower in price, we will take 1.86 billion. And if we were to go 3K up to 66K, we will take 3.77 billion. And that is the liquidity of the past 30 days. And you can tell that to the upside, there is 2 point something times more liquidity in the immediate proximity of $3,000. One of the things that escaped my radar on Friday was the increase in negative funding rates. That's typically an aspect that helps the price pushing higher. Our thesis from Friday pretty much up until today has been that we are going to 63K, and I wish I saw the funding rates being that negative, because this was a decent argument to go beyond 63K, which, if you remember, I was skeptical that we are gonna cross that level. And you see, sometimes it's difficult to put all into the same equation. I try to do my best. Keep an eye on the delta because it's getting quite high at the moment. We have 323K. The delta goes into the green at high numbers when we are having a pump, and when it goes too high, it can put in risk the movement. So don't be surprised that delta means liquidating all these areas in here. But if you focus on the bigger spikes, we have here immediately below the price at least 3 or 4 of them, but depending on news and market opening on New York as well, that could drag a little bit further down. On fire charts, the support is quite thin at the moment. Below the price, we have 3 chunks, one of 13 million, 21 million, and then 27 million. That spans from where we are up until 60K in moves of 1K at a time. Whereas above the price, immediately we have resistance with 18, 19K, and then immediately it goes into 31K. Yes, they can pull out when the price starts coming closer. The purple wells continue going higher. I remember over the weekend we talked that they are rounding down on this last push. They went long once again, but the big wells in here are mildly selling at the moment, together with the rest of the pocket sizes. Ethereum is doing an interesting move at the moment. If you've been watching my channel, we talk about these patterns quite a long time. I can give you an update on a separate video in depth. I just want to mention that after we had the breakout on the 23rd of September, which was really great to bounce off the red line in here and not to enter into bear market territory, we came back down for a retest, and on Sunday we confirmed the retest. We are above the trend line and now we are going sideways. This is a positive development, not just for Ethereum, but for the impact that it can have, the king of the altcoins, into the rest of the altcoins. Guys, if you open the description down below of this video, you're gonna find a collection of my favorite crypto product tools, all of them offering discounts and bonuses. For fair value gaps, for example, I use from Lux Algo their smart money concepts, which you can get a 30% discount if you use my link in the description. If you sign up with OKX, you can get 25% discount on trading fees and a 200 bonus as well. If you're considering to get a better crypto wallet as well, have a look at Tangent. With this card, pretty much you can do transactions anywhere without having to memorize any seed phrase. To do transactions, you pretty much grab your iPhone and tap on the back of the phone to confirm the transactions. It's very easy to install, and the iOS and Android apps are pretty cool as well. Whichever of the links down in the description that you end up using, you are supporting the channel to continue producing videos like this one.